Hi, welcome to the Active Value Investor channel. My name is Victor, and in this video, I'm going to cover Whirlpool. You likely know of this company. They are the biggest appliance company in the US. They have brands from KitchenAid, Maytag, Amana, and Whirlpool. Any Home Depot would show you plenty of their products, as well as other places like Best Buy. This is a stock that I own. It pays a good dividend, and I wanted to evaluate it and come up with a conclusion whether I should buy more shares, hold, or sell my shares. Let's take a closer look. So, I like to scorecard my investments, and I go over four criteria. First, do I want to be in the industry? Two, is the company operating and performing well? Is debt less than 3 times EBITDA? I want a discount on the stock. And based on those answers, I come to the conclusion of would I buy additional shares of this stock, hold, or sell? As you look at Whirlpool for the past year, it's been on a downward slope. It achieved a pretty significant peak if we look at the 5 year. Coming out of COVID, people are staying home, they wanted appliances. So Whirlpool saw a boom for their appliances, and they've had kind of a decline ever since. Now, I started buying into it once it dropped because I really like the dividend. And I don't know that it's going to drop any much further. Just there's a lot of value in this company. It's a respected company. When we look at the valuation, I value companies based on free cash flow. And this is my cash flow model. It uses free cash flow that we expect. And I'm starting with the $950 million that the company has guided will be free cash flow for 2022. I'm going to grow that free cash flow by 4% in years 2, 3, and 4. And then perpetual growth into the future will be 2%. I got the weighted average cost of capital from Finbox for Whirlpool, 11%. And based on those inputs, my model came up with a valuation of Whirlpool of 10 billion, 300 million. But the market cap is 8 billion, 220 million. Therefore, it has about a 17% discount, not a huge discount. Looking at debt to EBITDA ratio, it's 4.4. I like to see 3 or under. So this one does not get a passing grade. Whirlpool, from a performance standpoint, they're the number one appliance company in the US. And that's saying something. So it's good to have a company be the leader. And they have scale. They have their brands are very recognized. So that has a lot of value. The revenue is declining because he had a COVID surge. So that's expected to some extent. They generate free cash flow. In fact, they do a yield of 12% free cash flow compared to the market cap. And they pay a very nice dividend of 4.6%. For 2023 guidance, they're going to have flat revenue probably in 2023, but they're going to be profitable and they're going to generate high free cash flow. And I think their business will be steady until the recession is over. And once we have kind of a growth period in our economy, I think you'll see higher appliance sales and you'll see them boom again. So again, they're going to be profitable, generate free cash flow. So coming back to the scorecard, is this an industry I want to be in? The answer is yes. I like to be diversified. This is the only appliance company, kind of consumer product company that I own. It is a quality stock, so I feel good about that. This company is very well operated and performing very well. The management team is excellent at this company. The You get a small discount on this stock, and their debt is more than 3 times EBITDA, so they don't get a passing mark there. Overall, I'm not buying any additional shares of Whirlpool. I'm going to wait for their next earnings release before making a decision whether I should hold or potentially sell my position. Well, thanks for watching the video. I hope you found it interesting and maybe found out a few things about Whirlpool. And I appreciate you watching. Please keep in mind, I'm not recommending you buy Whirlpool stock. I like to share my experience as an individual small investor as I buy into companies and share my analysis with you. Thanks again for watching. Good luck investing in 2023.